Thinking of investing in crypto but have no idea where to start? Crypto is smarter, safer, and more regulated than ever. And today I'm breaking it all down step by step. Whether you are in it for the tech or just curious about the gains, this is your beginner's guide to crypto investing. Hi, this is Capital&Crypto, and if you're new to the channel, welcome! We talk about money, tech, and financial freedom every week, so don't forget to hit the subscribe, and be aware that we'll only share general knowledge and not direct financial advice. Let's get started! Is crypto still worth it in 2025? In short, yes, if you play it smart. Crypto in 2025 is less of a Wild West and more like a regulated frontier. We've seen the rise of central bank digital currencies, clearer tax laws, and even ETFs for Bitcoins and Ethereum. And now you can even buy a house in Japan using cryptocurrency. So all this means more opportunities, but also means more responsibility. So don't just follow hype, follow fundamentals. So that is why we have this how to start investing step-by-step guide for you. So the first step is always to learn the basics. So what is cryptocurrency? Spend a few days understanding what you are investing in. The key concepts to learn first. For you have to know what is Bitcoin, what is BTC, the original cryptocurrency, also known as the digital gold. And you have seen the price surge over the years. And the next is ETH, Ethereum. It's a smart contract platform. Think of it as a programmable blockchain. And stablecoin, USDT or USDC, these are the examples of stablecoins. And cryptos, they are cryptos pegged to the US dollar for stability. And you might have heard of altcoins. These are other cryptocurrencies with various use cases like Solana, Avalanche, Chainlink. You might have heard NFTs and DeFi, so non-fungible tokens and decentralized finance. These are the areas within the crypto world. So we have a beginner playlist on this channel, and you can make use of those very good sources like the Investopedia's crypto section and Reddit communities. They have very good responses there. Some of them are very experienced in crypto investment. And you can always go to a bookstore and get the books about Bitcoin or cryptocurrencies. So the first tip is to study before you invest. Knowledge is your number one crypto asset. Step 2 is to choose an exchange and a safer one. Your first stop for buying crypto will be a centralized exchange. Think of it like the stock exchange's cousin, but for crypto. So what to look for in a crypto exchange? Number 1 is security. It has 2FA, cold storage, insurance coverage, etc. Low fees. Trading and withdrawal fees do matter. So some platforms are more cost-effective for beginners. Number 3, the user experience. Is it easy to navigate? Have clear charts, helpful customer support. Number 4, don't forget to check the regulation and reputation of the platform. Make sure the platform is properly licensed in your country before buying. And we have the top recommended exchange by the internet. As of 2025, we have the Coinbase. It's beginner friendly. It's strongly regulated in the US. And we have Binance, has a very good global reach and low fees and lots of coin varieties. And we have Kraken. It's excellent for both beginners and pros, and they have very good security. So start on a trusted exchange first. Don't chase sketchy platforms for the lowest fee. Step 3 would be to set up a wallet. Just like for the fiat currency, we have a wallet to keep our cash and credit cards. It's the same for crypto. So we have 2 types of crypto wallets. One is called the hot wallet. It's software-based. It's always online, connected to the internet. It's very good for daily use or for small amounts. It has backup and recovery options, so it's very, very useful. And we have cold wallets, and it's hardware-based. It's offline and immune to online hacks. It's ideal for holding larger amounts or long-term assets. And it has max security. Do pay attention about the disadvantages of hot and cold wallets as well. Hot wallet, because they're online, they're very vulnerable to hacks, and they always target for scams. And if your wallet sits on the exchange, it has the exchange risk, meaning the exchange might shut down, just like the FTX a few years back. And cold wallets is less convenient, it's more complex to set up, and it has the physical loss or damage risk. If you lose the cold wallets, you can never find the cryptocurrencies that start in the cold wallets. Never, ever again. Step 4, start small and smart. Here's what most beginners mess up. They go all in during a hype wave and just don't do that. What to do instead? Be careful, this is not a financial advice. This is just one of the strategies. It's called dollar cost averaging. You can invest a fixed amount of money at regular intervals. So for example, as small as $50 a week. So this reduces the risk of buying at the top, and it smoothes out price volatility over time. So imagine like buying $100 worth of Bitcoin every month since 2020. Your average cost will be way lower than someone who dumped in 5,000 at once. So DCA reduces emotional investing, and remember to stick to your schedule if you use DCA. And step 5 is to diversify and monitor your portfolio. Even within crypto, you want to diversify because each sector moves very differently. The first type is called blockchains, also called the base layer. These are the platform other projects are built on, kind of like operating systems. So first is ETH, Ethereum. It's the most popular for apps and smart contracts. Solana is fast and has very low cost. And the second type is called decentralized finance. These tokens power tools that let people lend, borrow, and trade without banks. So these are some examples you can try to Google or you can try to do your own research on. And the third type is called gaming tokens. So these are used in crypto-based video games and metaverse worlds. And the fourth type is the infrastructure and oracles. So these help the crypto world run, providing data and support for other platforms. And the fifth type is AI and trending narratives. These are tokens focused on artificial intelligence or popular new tech ideas. But remember, you don't need to invest in everything. The first step is always to understand what each type does. Also monitor your portfolio. You don't need to obsess daily, but weekly or monthly check-ins do help. So you can use those very useful apps to track your performance. Crypto moves really fast. You need to stay updated, but don't panic about the news. Lastly, I would like to highlight the common mistakes to avoid. Here's how beginners lose money and how you won't. So the first is fear of missing out. Those who chase pumps usually leads to buying high and selling low. So just don't do that. Stay calm. The second is ignoring scams. If it sounds too good to be true, it is too good to be true. So always verify or consult a more experienced investor before taking actions. The third one is overtrading. So like checking the charts every 10 minutes. That's not a strategy, it's just stress. Number 4 is no exit plan. So know when to take profits. Plan your exit before you enter. After all this information, crypto is a powerful tool, but like any other investment, it requires knowledge, patience, and discipline. So stick to your plan, keep learning, and don't fall for shortcuts. If this helped you, hit the like button and drop us a comment with your biggest crypto question. I can answer that directly or in my next video. See you!